Welcome to Tony Byrne's View, with news you can use. As a chartered financial planner and wealth manager, Tony's passion is to help you retire early and live the life of your dreams with no financial worries. Now to today's episode.
7 little-known tax benefits of ISAs. Most investors know about the tax benefits of ISAs. ISAs, or individual savings accounts, are free of income tax and capital gains tax. A maximum of £20,000 per adult may be invested into an ISA each tax year. The two main types of ISAs are cash ISAs, which are tax-free bank accounts, and stocks and shares or equity ISAs. However, there are a number of little-known tax benefits of ISAs which I'm going to cover in this podcast. Reinvestment of withdrawals. If you withdraw funds from your ISA during the tax year, you may reinvest into an ISA up to the amount you withdrew, together with the usual maximum subscription of £20,000. This will have the effect of you putting yourself back into the position you were in before making the withdrawal. This is only possible if your ISA is a flexible ISA. Additional permitted subscription. The surviving spouse or civil partner of an ISA investor who died on or after 3rd of December 2014 can receive additional permitted subscriptions on top of the annual ISA subscription limit. These subscriptions are limited to the value of the deceased's ISA at the date of their death and can be made to cash, stocks and shares or innovative finance ISAs. The surviving spouse or civil partner must have been living together at the date of death and must not have been separated. Invest in a maximum of 4 ISAs in a tax year, not one. You can only open one ISA per type of ISA every tax year. As there are 4 types of ISA, you can open 4 ISAs per tax year, provided they are 4 different individual savings accounts, which are cash ISAs, stocks and shares ISAs, innovative finance ISAs and lifetime ISAs. Also, you can deposit a maximum amount of £20,000 in all the ISAs combined. The total value of savings deposited in the ISAs must not exceed this amount for the 2022-23 tax year. The deadline is the 5th of April 2023, after which the new tax year begins and it will all go back to zero again. Invest more in your ISA by adding back the charges. Some ISA providers will allow you to add the initial charges to your ISA, which effectively allows you to invest more. So, for example, let's say the initial charge is 2% and the amount invested is £20,000. The charge of £400 can be added to your subscription amount, meaning you invest £20,400 instead of £20,000. This results in you investing £400 more into your ISA. 16 and 17-year-olds can invest in both an adult ISA, £20,000, and a junior ISA, £9,000 in the same tax year. 16 and 17-year-olds can open both a junior ISA and an adult cash ISA with a total amount saved subject to a £9,000 limit for the 2022-23 tax year for junior ISAs. Any money placed into junior ISA will not be able to be accessed until the child turns 18, at which point the cash becomes theirs. During these years, they can benefit from having up to £9,000 deposited into the junior ISA account and an additional £20,000 into their adult ISA. Any child under 18 can have a junior ISA, but how to actually open one depends on when they were born. A parent may invest in a junior ISA £9,000 every tax year for children aged under 18. Junior individual savings accounts, or ISAs, are long-term tax-free savings accounts for children with a savings limit of £9,000 in the 2022 to 2023 tax year. Parents or guardians with parental responsibility can open a junior ISA and manage the account, but the money belongs to the child. The child can take control of the account when they're 16, but cannot withdraw the money until they turn 18. AIM ISAs are potentially free of inheritance tax as well after 2 years. An AIM ISA is a portfolio of AIM shares which can be exempt from inheritance tax. AIM stands for Alternative Investment Market, a sub-market of the London Stock Exchange. The AIM allows typically smaller and faster growing companies to issue shares and raise capital to fund that growth. Not everybody is aware of these particular tax benefits. of ISAs, but if you use the rules to your maximum advantage, it is surprising just how much you and your family can save in a very tax efficient investment over time. You know it makes sense.
Thank you for listening to today's episode. If you enjoyed it, don't forget to share it with your friends and family. For more information, head to www.wealthandtax.co.uk.